Hello, tubers! Good morning, good afternoon, good evening, wherever you are, and welcome to our Money Matters segment. Today's topic, my Bitcoin miners, Proxies got wiped out. But first, I want to give you a little update on the Bitcoin ETFs this week. Before that, though, a disclaimer, I'm not a financial advisor, so, it's not financial advice I'm giving here. It's things I've read, things I've noticed, things I'm doing myself, and hopefully it can, benefit people watching, to make their decisions. But anyways, so what happened this week? Well, Grayscale, one of the ETFs that was approved by Gensler, the biggest one actually in existence, it was not really an ETF at the time, but they did get approved. Well, they've been dumping big time Bitcoin onto the trading platforms, Coinbase, for example. So that has had a depressing effect, in my opinion, on not only the price of Bitcoin, but their volumes, or at least it's increased their volumes, but somewhat misleading, as they're actually having to liquidate Bitcoin once their shares are being redeemed, which is what's happening. But don't let that worry you. It doesn't worry me. There's still a huge demand going into these ETFs. So it's been about a week now, about 6 days of information we currently have since the ETFs were open for trading. And what's happened? On average, there's been $250 million inflows, and this is net inflows of new Bitcoin purchases being made. So this is disregarding Grayscale dumping their coins because they have some trading volume. But when you net them out, new money, strictly buying new Bitcoin, $250 million a day. Well, that's been unheard of for ETFs being introduced. So Bitcoin definitely is doing very well, let's say, when you compare it to other ETFs that have been issued. So what's that equate to? That equates to about 6,200 Bitcoin per day on average being purchased, being put into ETFs that were approved, and so that's interesting. Now, who are the big players? Well, BlackRock initially, as everyone knew, was the biggest going in, expected to be the biggest after a while, and Fidelity was expected to be in second place, and then it was kind of a toss-up, although ARK Investments probably had a good leg up as well. And so that's been happening, but there's an interesting twist going on that I'll get into. I'm not really talking about Grayscale here, guys, because in my opinion, Grayscale is just going to continue to dump. I think that's going to hold the price steady. The price is somewhat volatile. It's around 42,000 today as I'm making this, and it's been trading between 40,500 and 43,000, say, and that's fine. Like me, you're probably in for the long term, the long haul. So, these minor blips are, not earth-shattering. But with the ETFs, there was a saying I came across, and it was kind of interesting. Winners take most. So BlackRock was expected to take most of the new money, let's say, as well as Fidelity, and that's been happening. So they've each accumulated close to 30,000 Bitcoin, after the 6 days. And the others, I'm guessing probably between them maybe 10 to 15 tops. So they have the bulk of the share, let's say. ARK21, ARKB is their symbol. If you check it out, they're in third place. Now, what's happening and what I find interesting, Fidelity is really making a run at BlackRock for overall lead in the demand for their ETF shares for Bitcoin. Now, volume-wise, let's go back for a second here. Day one obviously was the highest volume, set new records for ETF introductions. Day two dropped off, day three dropped off more, and that was to be expected. But what's happened the last 3 days? Day 4 came in, day 5 was higher, day 6 was higher yet. And that's rare, like extremely rare. I don't recall any ETFs being issued. Usually it's a slide downwards as, the days go on because it's, most of the pent-up demand has been satiated. But that's not happening here. The actual demand has started to reverse and go up now. So that's quite interesting. In fact, on Friday, which is yesterday, Fidelity overtook BlackRock in volume. And that's interesting to me. So when I looked into it, and this is a fact that probably most people weren't aware, I had heard it, but I didn't put a lot of credence into it until I started thinking about it. Fidelity is the only ETF that does self-custody. And when you look at everyone else, Coinbase, they're all relying on a third party to custody their Bitcoin, and that is Coinbase. Which begs the question, and I don't think anything would ever happen to Coinbase, but you never know. Things get hacked. It's not going to happen to your Bitcoin. Bitcoin's not going to get hacked. It's who's got them. Well, with Fidelity being self-custodied, you eliminate that third party issue. So that might be a reason people are switching, to which is, I think, what's happening from BlackRock to Fidelity. We'll see as time goes on. But speaking of switching, getting back to the Grayscale, that's why Grayscale is having to dump. Their fees are ridiculous at 1.5%. And, and it's a Canadian company, so, being Canadian, I had a soft spot there for years, but not when they can't be competitive, and they've chosen not to be competitive. When you've got the other companies in here, between 0.2 and somewhat free for a period of time, and 0.2 to 0.5% versus 1.5%, that's too much of a spread. And they're claiming, Grayscale, that, we've been in the business, we know what we're doing, people trust us. It's a money grab, in my opinion. An outright money grab. I mean, it's a huge money maker for them, and they didn't want to see that lose out, but they're going to lose out. So anyone listening, if you've got Grayscale, look into that fee structure. You might be interested in switching to the others, after you do your research. Anyways, so that's kind of what happened after the 6 days. Fidelity will be interesting to watch them dueling it out. So where are we headed? Well, demand's not slowing down, so demand's picking up, in my opinion. And the amount of supply, once Grayscale gets their act together and gets, there's going to be a point where they don't have to, put more Bitcoin on the open market, let's say, to redeem, their investors that want out. Eventually they'll be out, and they'll be left with whatever they're left. Which I don't think will be a lot, but so it might be a while before they've actually, rectified their issues. However, the demand for Bitcoin is still outpacing what they're bringing to market, as I mentioned. And what's the supply doing? Well, there's still, as I mentioned last week, there's only 900 Bitcoin per month being mined available for sale. And there's another interesting fact. They figure between 500 Bitcoin per day and 1,900 Bitcoin per day are actually lost, and lost forever. Meaning people have passed away without, others knowing the keys. They've lost their keys. They've lost their hardware devices where the coins are stored. There's several reasons. Again, leading to the fact, hey, maybe you're better in a Bitcoin ETF than self-custodying. So that being the case, and I suspect there is some of that, meaning there's less and less supply of a fixed product going forward. And I can relate to that. I have, a sports card collection. And, I was buying for years cases of cards, and I still have them. And yet each year there's less and less of those cases available. And, some get opened, some get destroyed in fires, some get destroyed in floods. So there's reasons where a supply that's fixed, they're not printing any more cards for that year, 20 years ago, that they're, diminishing. And this is happening as well with Bitcoin. So your supply is very limited compared to the demand that's coming every day. Do I see the demand dropping? No. Do I see the supply being eventually liquidated that's available? Yes. And what will that cause? Well, when you have the fixed supply and the demand keep going up, you're going to see a price movement. Again, that's being tempered currently by grayscale. However, that's going to end at some point. And let's see. The miners, the other thing that was depressing the price somewhat, quite a few of the miners, I think, were taking advantage of the demand around the ETFs to sell some of their stacks, their HODL stacks that they've mined. Now, that's not a bad thing. I don't suspect at all they were doing it to, they thought the price was going to drop. I think they were doing it, for the most part, to purchase new mining rigs, let's say, sorry. And the rigs, the halving is coming. And why are they selling the coins now? Well, they're selling them because they need to be efficient when the halving comes. What basically happens at the halving, most of you are aware, your reward for mining drops in half. Your electricity costs, your energy costs, have stayed the same, but your rewards have dropped in half. So you're, you want to make sure you're the most efficient out there. And I do believe there's a whack of miners listed. There's a lot of them aren't going to make it because they're not efficient. Where they're making a few pennies per, hour now, when it's cut in half, they're losing pennies per hour. Well, they're going to shut the machines off. Why are they losing? Well, they don't have the most efficient machines. The most efficient are making $1 per hour, let's say. So if they're cut in half, they're still making half a dollar or whatever. But it's that's I think happening as to why the miners are, there will be consolidation in the miners, and I think some of them were, selling out some of their stacks to do that. Okay, what's that mean? That just means the supply is even less with the miners. Okay, so the amount of Bitcoin being held for sale is reducing daily. The miners' HODL stacks are reducing daily. The production is fixed. There's more coins being lost every day. Writing's on the wall where the price is going to end up. So, where are we headed? Well, let me tell you where we're not headed first. We're not headed to zero, okay? A lot of the pundits thinking, oh well, Bitcoin's a scam, Bitcoin's this. Let's step back, zoom out, take a look in. You've got 11, the largest money managers on the planet, worldwide, getting government approval for ETFs on Bitcoin. Well, I don't think that product's going to zero. You've got billions and billions of dollars being invested into Bitcoin. You've got thousands, hundreds of thousands of miners running to produce Bitcoin. The industry is huge, and it's going to get bigger. So I don't think it's headed to zero. And so where is it headed? I think it's nowhere but up. And there's a reason for that. People are wanting to protect their investments. It used to be gold. It's funny, Bitcoin ETFs have overtaken silver in the amount of investments in them. ETFs for silver, for example, is a store of value. I suspect it'll be less than a year before they've overtaken gold as a store of value, the ETFs, that is. So time will tell. Couple interesting facts I did find out this week. The U.S. government owns 215,000 Bitcoin. That's approximately 1% of the total that will ever be mined. China owns 190,000 Bitcoin. MicroStrategy owns 189,150 Bitcoin. I strongly suspect all three of those entities now might never be selling them. So time will tell. Maybe they will. But that was interesting. So yeah. And one little side note, Vanguard still is telling their customers they can't help them with Bitcoin. Any type of Bitcoin purchases. They're not interested in having their customers, Vanguard's customers have their money invested with Vanguard. And, the customer calls up, says, yeah, I think I'd like to put, a percent of my holdings or a couple percent, or I'd like to buy 100 shares of, this ETF. Oh, no, I'm sorry, you can't do that with us. And to me, that is astounding that they're telling you what you can't do with your money. Well, here's something you might get a kick out of. Vanguard owns 8.5% of MicroStrategy. Now, MicroStrategy is a software company who's only in business to hold Bitcoin, okay? They also own 9.3% of Riot blockchain technology, which is first or second always the biggest Bitcoin miner on the planet, with a big stack of Bitcoin on their sheet. They own 8.3% of Mara, and Mara's one or two. So the top two miners, Vanguard is a huge shareholder in. And lastly, they're 4.6% of CleanSpark. So those are three of the biggest miners, as well as 8.25% of MicroStrategy, which is only in business to buy and hold Bitcoin. So what's my point? So Vanguard is investing in all these Bitcoin-related, call them proxies if you want, but it's Bitcoin, right? And yet won't let their customers participate. Very strange. Anyways. All right, getting back to today's headline. My Bitcoin proxies got wiped out. So I'm sitting here about, I think it was December 27th, just after the birthday. And let me give you some prices. MicroStrategy, $670. Mara, $31. Riot, $18. CleanSpark, $13. Jumping ahead. Yesterday, January 19th, MicroStrategy down to $481, 28% drop. Mara down to $1613, 48% drop. Riot down $1029, 45% drop. And CleanSpark $687, down to 49%. So why am I chuckling and laughing? Because it's only temporary. It's a pullback, and some people would consider that a wipeout, and probably I did too. But it's a pullback, really. And what is it? It's a fantastic entry opportunity for people wanting to get into these proxies. I bought more on Friday because of I think it's pretty well near the end of the drop. So what happened? Well, there was a huge sell-off, obviously. When sales exceed demand, prices will drop. And that was it. Now, what caused that? I think a lot of it, believe it or not, might have been people switching from Bitcoin proxies, meaning MicroStrategy, possibly the miners, switching into the actual ETFs themselves, Bitcoin. And, whether there's much of it, I don't know, but I can see some of that, speculators getting washed out. I can see that. People with what they call paper hands. I consider myself to have diamond hands. I'm in for the long term, so I don't get too upset when prices like that drop in 3 weeks, a little over 3 weeks. But a lot of people aren't like that. They don't have a high risk tolerance. They've invested possibly at these higher prices going into the ETF openings, and Prices drop, they get out, and it's like a FUD. Like it's self-perpetuating. Prices drop a little more, they sell. That causes price to drop a little more. That causes more people to sell. So it's self-fulfilling, maybe. But and some of it is technical. The RSI, which is the Relative Strength Index, they did show these miners as being overbought. And when things are overbought, they typically will tend to go lower. It's just the opposite when they're oversold, which I think now they're either in oversold, most of them, or approaching it, where things are oversold. So they're typically going to trend back up. So that's what's happened there. Miners, some of them were selling their Bitcoin, as I mentioned. So, when miners sell Bitcoin, there's less on their balance sheets, and that could be a part of the reason why people were, getting out of the miners. I think the biggest reason, however, was one of the biggest reasons was the concern about the halving coming in April, where their rewards, being the miners' rewards, will be cut in half. And yet their costs typically are fixed. Their fixed costs, for sure, are going to stay the same. And what's that mean? That means that, in my opinion, there's going to be a huge consolidation in the Bitcoin miners. The big will get bigger, and the smaller will get gone. They won't be able to, cut it. So a lot of them now are, I'm not going to say treading water, but they're slightly profitable. They're getting their paychecks. They're breaking even, let's say, or, maybe a bit ahead. But when the cut, when the revenue gets cut in half, those guys are out of there. And they probably know. They'll just unplug the machines, look for a buyer, and away they go. Life goes on. The big boys have been, and these halvings occur regularly, and they're programmed. So people know. It's not a surprise. Every 4 years it happens. So people are able to plan ahead for that, and the big boys have done that. They've secured the most efficient miners going forward. They're growing their exahash, which is volume, and they're going to be there, for the long term. So that's why I'm not concerned about the miners going forward. I've done my research, and that's a big part of it. They're the lifeblood of the Bitcoin network, is the miners. So they're going to be here forever to protect the network and produce the Bitcoins. The last Bitcoin isn't going to be produced till 2140. So, that's a long time ahead. The miners I mentioned, I own. And I dollar cost average. Why do I do that? Well, there's certain things I look for in my miners. I like them to have a HODL stack. So I like them to have Bitcoin on their balance sheet. Well, Marathon's one of the biggest holders. Riot's right behind. And CleanSpark's, up and comer who's doing well too. And they're the largest. They're the largest miners on the planet, and they're growing. So, you want to see growth going forward. They're also the ones that are making use of these state-of-the-art machines that are available now. So when the halving does come, they're going to be able to, let's say, cut the mustard, okay? They're going to be there producing a profit. Should Bitcoin, relatively hold, go up slightly, because they're profitable now. So they're the most efficient. They're also, the other couple of reasons I like it, the miners, is I'm able to leverage Bitcoin without having to use margin. In other words, I don't need to use other people's borrowed money to get into Bitcoin. I use the miners as my proxy, and that is a leverage, because you'll find out that they go up dramatically as Bitcoin goes up, and they also drop dramatically, which they have when it doesn't. So, but that's okay with me. I don't use margin, so I'm not worried. It's all my money. And lastly, and this is a big reason, I like the option premium I can collect on the miners. Now that's come down, or at least it's come down in the last 3 weeks, as I mentioned. When those prices drop, your premiums drop as well. But if I keep it short term, typically 30 days, so you're always rolling over into a new cycle, at least some of them. and you're going to get the big, the bigger wins on premium with the lower wins, but you're still getting it. Something, let's say. So, but anyways, that's it. The minor drops, yeah, it's a good opportunity to dollar cost average. Look at doing that. Above all, do your research. I'm not here to tell you what to do. I'm just kind of reporting what I did and what I see happening out there. It's very important you do your own research so you're comfortable. That way I can kind of chuckle when I see these drops and not panic because I did my research and I sleep good at night. And I'll sleep good tonight. Okay, without further ado, stay tuned. Thanks again, and thanks for watching. Hit the likes and subscribe. That really helps the channel. And do me a favor, tell your friends. Bye for now.